Hi guys, we start our Coil project. We used to company Tesla. So now we talk about company's overview and business description for this company. Uh, Next slide, please. So Tesla Incorporated is an American multinational company specializing in the production of electric vehicles, renewable energy solutions, and advanced technologies. The company was founded in 2003 by Martin Eberhard and Mark Tarpenning and was named after the inventor of engineer Nikola Tesla. Since 2008, Elon Musk has served as the company's CEO, playing a key role in transforming Tesla into a global leader in the automotive and energy industry. Tesla's mission is to accelerate the world's transition to sustainable energy. The company is committed to the creation of a future in which energy is produced from renewable sources, stored in efficient batteries, and used to power vehicles and infrastructures. This vision is realized through the integration of electric vehicles, solar panels, and energy storage systems. Tesla's products range includes electric vehicles such as sedans, CUV, as well as renewable energy solutions such as solar panels and battery systems. In addition, for autonomous driving, will give tourism around the world, the United States, China, and Germany. 27 million. So despite increased competition, they're profitable.
Okay, so when talking about the industry overview, Tesla's stock performance is deeply tied to the evolving electrical vehicle, also known as the EV industry. The global EV market is growing rapidly, with Tesla holding about 14.55% of the market share. However, increasing competition from key players like BYD, Rivian, Volkswagen, Ford, and Lucid Motors has led to a decline in Tesla sales and contributed to a 35% drop in the stock price by 2025. Despite government incentives and regulation promoting EV adoptions, Tesla faces challenges such as supply chain distribution, battery production limitations, and tariff concerns. In 2025, these challenges resulted in a 13% decrease in vehicle deliveries and a further 5.75% decline in stock price. Could we move on to the next slide? All right, so moving on, when talk about the competitive positioning, Tesla stands as the most valuable automobile brand globally, with a remarkable market capitalization of $1.01 trillion. Its edge in the industry is underpinned by cutting-edge battery technology, advanced autopilot AI capabilities, and vertical integration, which streamlines production and reduces reliance on external suppliers. Tesla's strong brand loyalty, amplified by the influential presence of the CEO Elon Musk, ensures a dedicated customer base and a prominent position in the market. However, Tesla does also face challenges from competitors like NIO, XPeng, and Ally Auto, which also makes significant strides in the EV space. Additionally, substitutes such as traditional gasoline-powered vehicles and alternative transport options continue to pose threats. Regulatory risks also remain a concern, as government policies and environmental regulations have the potential to impact Tesla's operations and its overall performance. Yeah, that should be it.
Okay, so Tesla is a major player in electric vehicles and renewable energy, shown by its strong market value. The company has a market cap of 776.37 billion and an enterprise value of 753.53 billion. However, as of April 2025, Tesla is a market cap of 547.16 billion. This makes the world's 13th most valuable company by market cap according to our data. Its high price to earnings ratio of 118.32 reflects strong investor confidence in its growth. In the last 12 months, Tesla earned 97.69 billion in revenue and 7.13 billion in net income, proving its solid performance with 36.56 billion in cash. Tesla shows financial stability even with 13.62 billion in debt. Tesla stock has performed strongly over the past year, rising by 53.64% in the last 52 weeks. This reflects strong market confidence in Tesla's innovation and leadership in clean energy. However, the stock is more unstable with a beta of 2.58, showing it carries more risk compared to the market. Tesla's upcoming earnings report, set for April 22, 2025, is eagerly awaited and will likely give further details on financial health and plans.
So let's start with the income statement. Tesla's revenue for the trailing 12 months is about 98.7 billion, showing minimal growth, just 1% year over year. This is a big showdown compared to the previous year where we saw the double-digit growth, even up to 70% back in 2021. However, the bigger concern is profitability. Net income dropped significantly from 15 billion in 2023 to just over 6 billion this year, a 55% decline. This reflected in the EPS, which fell from $4.30 to $1.75. You can also see that Tesla's margins are shrinking. Gross margin fell from 25% to around 17%. Operating margin dropped from nearly 17% to just 7%. And profit margin is down to 6.4, half of what it was just 2 years ago. Moving on to the balance sheet. Here Tesla remains strong. They have 37 billion in cash and short-term investments and net cash of $29.5 billion, meaning they carry far from more cash than debt. And also their book value per share has steadily grown to $23.20, which shows solid value creation over time. Looking at the cash flow statement, Tesla's free cash flow amounted to $6.8 billion after a dip in 2024, and their operating cash flow jumped to $16.8 billion and a 53% increase. So the core business is still generating solid cash. So to summarize everything, Tesla is financially healthy with a strong balance sheet and good cash flow, but we are seeing clear pressure on profitability, growth, and margins. Okay, I'm gonna talk about the Tesla's projection and the forecast. Tesla has demonstrated exceptional growth trajectory over the past 5 years. In 2020 to 23, stock price gained over 400% despite market volatility and the supply chain challenges. Recent quarters shows stabilization following period of high volatility. And if current PE ratio remains above industry average, reflecting continued growth expectation. Trading volume pattern suggests strong institutional investor confidence, and the technical analysis shows a support level strengthening at key price points. Maintain a dominant EV market share in North America and the significant Europe and Asia, stock performance continues to outpace traditional automotive manufacturers. Market cap positioning reflect investors' confidence in Tesla's technology and the ecosystem beyond vehicles. Tesla's forward-looking projection. Um, Energy storage division projected to see 75% annual growth through 2028. Full self-driving technology anticipated to reach wider market adoption by 2026. New lower cost vehicle model expected to significantly expand addressable market. Revenue CAGR projected at 25 to 30 percentage through 2028. Operating margin expected to increase from current 15 percentage to 18 to 20% by 2027. Free cash flows anticipated to exceed $25 billion annual by 2027. Investment thesis. Stock price target range 325 to 400 to 12-month outlook. Key risk. Interest rate environment, competitive pressure, regulatory challenges. Bull case scenario. Contingent on accelerated FST deployment and the energy division growth. Bear case scenario reflects potential market share erosion and the margin compression. And the next slide will be continued. Am I audible? Hello. Am I audible? Yes, we are.
Yeah, we can hear you.
Okay, so let's now look at the Tesla's technical analysis. So on the right, you will see an infographic that summarizes the key trends. First, Tesla's stock price has declined significantly and now trading at around $238. The short-term trend is clearly bearish, with revenue, net income, and free cash flowing all are declining. We have marked out support at $170 and resistance at $289. Key price levels to watch if stock starts moving. In terms of sentiment, revenue are weakening, but Tesla has still positive cash flow, which is good sign operationally. The gauge here shows the bearish short-term trend, but longer-term optimizes depends on product launches like the Model Y, refresh, and robotaxi rollout.
All right, so when mentioning the AI features, Tesla uses artificial intelligence in several ways to improve efficiency and boost revenue. Its autopilot and full self-driving features are premium add-ons that can cost up to $12,000 per vehicle, increasing the company's earnings. Tesla also collects real-time driving data from its fleet to enhance AI models, which could be monetized in the future. The company plans to launch a fully autonomous robotaxi network, creating a high-profit business similar to ride-hailing services like Uber, but without any human drivers. AI helps automate gigafactories, making production faster and reducing costs. In the energy sector, Tesla AI making improves products like Powerwall and Megapack, enhancing smart energy distribution and grid forecasting. Inside Tesla vehicles, AI-powered voice controls and infotainment recommendations make driving more convenient, boosting customer loyalty and encouraging more sales. Overall, AI plays a very big role in Tesla's success and future innovations. Yeah, that should be it.
And about recommendations, about current situation, as at 23rd April this year, Tesla shares are trading at $237, representing at a $10 increase on their previous close. However, the company is currently facing a number of challenges, like earnings decline. Net income in first quarter this year fell 71% year-on-year to 409 million. Revenue decreased by 9% to 19.3 billion. Decreased deliveries, vehicle deliveries fell 30% to 336 units. And there has been a decline in the stock price. Shares value has decreased by 44% year to date. With regard to potential reputation risks, Elon Musk's political activity has led to a backlash, including protests and acts of vandalism at Tesla stores. About upside potential, despite current challenges, there is a reason for a cautious optimism. Elon Musk has announced that he is reducing his involvement in politics in order to focus on Tesla, a decision which has been positively received by investors. A more affordable versions of the Model Y and robotaxi service in Austin and Texas are scheduled to launch in June this year. AI innovation, the development of autonomous driving and the Optimus humanoid robots is ongoing with the potential to generate new revenue streams. About risks and challenges, competition, that is the first. In the current market, there is an increase in competitions, particularly from Chinese manufacturing, such as Build Your Dream. High interest rates and declining purchasing power could continue to impact demand. Stock valuation. Some analysts has expressed concern that the stocks may overvalued given its current financial performance. About current forecast, the range of Tesla stock price forecast for this year is the follows: Wild Bush from $550, $15 to 550. 650. Morgan Stanley, that is $400. As the US News, that is $250. The average forecast for Tesla stocks is $319. Given the company's current financial performance, market risk, and growth potential, Tesla stock is recommended as a hold. Investors are advised to closely monitor the company's new product developments and strategic initiatives. And in this slide, I think we finished our presentation. Yes.
So here are the references that we took the data from. All of them are listed over here.